In the market analysis, we examine the stock market to assess its valuation levels and determine how attractive an investment in stocks is currently. We also evaluated the optimal cash reserve size to take advantage of lower stock prices during market declines. The next step in building a portfolio of undervalued stocks involves identifying promising industries and sectors. The Premium Tools Sector Analysis feature assists in this process. The sector analysis heat map represents sectors by valuation levels. Green indicates undervalued, orange fairly valued, and red overvalued. By double-clicking on the heat map, you preview stocks within a sector, including their current price and margin from fair value. Stocks with the greatest margin are particularly attractive. Use the stock screener to refine searches further. In the next video, we'll explore selecting individual stocks. Note that some sectors are cyclical, affected by commodity prices, economic conditions, and political changes. Focus on predictable industries generating steady profits. Cyclical industries such as energy, basic materials, and consumer discretionary sectors are influenced by commodity prices, economic growth, and political stability. For instance, the oil and gas industry faces fluctuations due to crude oil prices and geopolitical events. Mining companies depend on demand for raw materials like gold and copper, with profits rising in strong economies and falling during downturns. The automotive sector is another example. Demand for cars relies on disposable income and economic stability. Economic growth boosts sales, while recessions reduce demand. Airlines face similar trends, with revenues tied to economic health and fuel prices. Thriving economies increase travel, while downturns or high costs strain profitability. Non-cyclical industries or defensive sectors include healthcare, utilities, and consumer staples. These provide essential goods and services consistently in demand. Healthcare companies, such as pharmaceutical firms developing life-saving drugs, enjoy stable revenue streams. Similarly, medical device manufacturers cater to essential needs, making them resilient during downturns. Utilities, offering services like electricity and water, see stable demand regardless of economic conditions. Electric utility companies experience minimal revenue fluctuations, as electricity remains a necessity. Consumer staples, food, beverages, and household products are equally resilient. Firms producing packaged foods and cleaning supplies perform well during uncertainty, as consumers prioritize essentials. Technology spans both cyclical and defensive characteristics. Enterprise software firms providing essential business solutions have steady revenue, while consumer electronics companies experience volatility based on discretionary spending. High-growth tech firms, like those in AI or cloud computing, offer high returns but with higher risks. Real estate is sensitive to interest rate changes, as higher rates reduce profitability by increasing borrowing costs. Real estate investment trusts, REITs, provide diversification and steady dividends. Commercial properties in prime locations perform consistently, whereas luxury developments are more cyclical. The financial sector, including banks and insurers, ties closely to economic conditions. Banks benefit from rising interest rates but face challenges during downturns as defaults rise. Insurance companies, especially life and health insurers, often show stability with revenues based on premiums. Industrials, manufacturing, construction, and transportation are cyclical, depending on economic activity. Growth periods drive demand for equipment and materials, while recessions slow these activities. However, firms producing essential agricultural or renewable energy machinery may show stability. The energy sector includes oil, gas, and renewables. Traditional energy firms thrive during high oil prices but are volatile. Renewable energy companies focusing on solar and wind power gain traction with sustainability efforts but face policy and technological challenges. By analyzing these industries' characteristics, investors can build diversified portfolios aligned with financial goals and risk tolerance. Try to build a stock portfolio consisting of various industries. You can learn exactly how to do this in the Stock Portfolio Manager under the Portfolio tab.